A number of Century clients have called us and asked about the issues that are now in the headline news. Some of these include the problems with Greece and the banking system in Europe, the so-called fiscal cliff, where we're going to see a large tax increase or potentially see a large tax increase with the expiration of the Bush tax cuts next year. There's concern about a double-dip recession in the United States. There's concern about Obamacare, about the costs associated with increased expenses of health care and the potential Obamacare tax. And finally, there remains the unemployment, the high levels of unemployment that don't seem to recede. Some of our clients think that the answer to facing these headline risks is to simply sell the stocks and bonds and move to cash. But is that really the appropriate thing to do? What are the alternative strategies, and what insights do we at Century Management have in other ways of managing money under these conditions of uncertainty?
Well, I would say the first thing you have to think about is a lot of these things are projections of things that could happen. We don't know for sure whether all of them are going to happen, but let's just assume they do. The problem with going to cash is once you go to cash, you go into a vehicle where you're not making any interest to speak of. You're making less than 1% or any at all. That's number one. But since the idea is to protect the portfolio, that wouldn't be bad to give up the interest. The problem is that there are many offsetting things to these headline problems that the news media doesn't talk about. For example, we have a situation happening today in natural gas. This is something that really could be a major change over the long run in the economy. Because of hydraulic fracturing, we are able to produce natural gas way in excess of what we have done in the past. The natural gas cost is way down. We're, for the first time, probably going to be an exporter in natural gas. So there are a lot of things such as this that are very positive to the economy over the long run, might not have much meaning in the short run. So if you take some of the positive factors and you go to cash and they offset some of the negative factors, then you're sitting there in cash and you have no opportunity to make money. The other thing that we need to be concerned about is inflation over the long run. It's not a problem short term, but it's a long-term problem. If we go to cash and we miss opportunities, then when the inflation comes and you're sitting in cash, you can take a larger loss in purchasing power than you could by staying in the market. So what you have to do is you have to weigh these factors.
But additionally, if you're going to sell stocks based on bad news and raise cash on bad news, then when are you going to buy stocks back? What news item is it going to be to generate that trigger to change your offset? So you have to have a consistent, disciplined way to buy and sell stocks and manage it, and manage your portfolio. So our view is managing a portfolio based on news items, where a news event is negative, so it triggers a sell, or it's positive, it triggers a buy. We've got news items that offset each other all the time, which will whipsaw investors. So you have to have a consistent, disciplined manner in which to manage a portfolio. And our approach to that is to take individual stocks, evaluate them, looking at, from a worst-case standpoint, during a recessionary period, how bad do fundamentals get and how bad do the multiples and margins get, and we apply what that worst-case scenario would mean in terms of a stock price. And so we're trying to bracket that bad environment such that people are concerned about now. On the opposite side, when things go right, what happens to the margins, the multiples, et cetera, and where would the stock be at that point? And that's what we call our valuation structure. So incorporated in our structure is the idea of recessionary environments, including all the bad news items. We don't know what they are. There's going to be some that develop in the future. We can't predict it individually what those news items are, but we have done it by looking at recessionary environments of the past, because recessions have had their own bad news, and that has affected stock prices.